All right, let's talk about the HSA and something that might just change the way you save money for healthcare and beyond, because right now there are three separate proposals to either completely eliminate it or upgrade the existing health savings account through HR 5687 and 5688. Either way, things are shifting, and we need to talk about what this means for your money. But please keep in mind that one of the proposals is still in the Ways and Means Committee, and the bill is not yet drafted. The other two bills were drafted back in 2023, and they've been sitting there ever since. But one of them is gaining some momentum in Congress, and I'll go over all three of them in this video. And I'm not gonna lie, you're probably not gonna like one of them, but you're gonna like one of them. So after you watch this video, you still have time to write to your congressman or woman to either support or oppose the proposal. And that's if they'll ever reply to you. And speaking of replying to someone, do you think it's more disrespectful to reply to someone with a K or leave someone on red? It's a legit question. But anyway, the first proposal suggests replacing HSA with a $9,100 universal savings account that functions more like a Roth style savings account, meaning after-tax contributions that grow tax-free and adjusted for inflation. So that limit will go up every single year. And I promise I will make a separate video about the universal savings account, so be sure to subscribe if you haven't done it already. Now, here's what you can expect. According to the Tax Foundation, this change is estimated to save the government $110 billion over 10 years, which sounds impressive, but who's paying for that $110 billion? Well, it's going to be us, taxpayers. If this preliminary proposal comes true, then we might end up losing the pre-tax benefits we're all enjoying right now with the HSA. The Tax Foundation stated in this research article that $110 billion over the 10-year budget window was measured on a conventional basis from the revenue gained on the Roth USA or the universal savings account when the contributions become after-tax dollars. So what does this mean for the average people like you and me? Well, in the year 2025, you can contribute up to $4,300 to your HSA as a single individual or $8,550 on family coverage. And if you have a combined marginal tax rate between the federal and your state at, let's say, 28%, then you could put $2,394 back in your pocket from the pre-tax savings for the family coverage, or $1,204 if you're on the individual plan. And that's what it means to have the pre-tax HSA contributions, because you're saving taxes up front. And the only two states that don't allow you to deduct your state income tax are California and New Jersey. So please keep that in mind. So if they get rid of the HSA and replace it with the universal savings account or the USA, it's so weird to say the USA over and over again, but those pre-tax benefits will be gone because you will have to contribute to the USA in after-tax dollars like a Roth IRA. And at the same time, if you have your HSA directly deducted from your paychecks, you save another 7.65% in payroll tax, and which includes your Social Security and Medicare contributions. And the money inside your HSA will grow tax-free, and then you can take the money out of your HSA tax-free if you use it for qualified medical expenses. And then when you turn 65, the HSA becomes your traditional IRA by using it for anything. And it doesn't even have to be a medical expense, but you will have to pay federal and state income taxes just like a traditional IRA. Now, according to the same Tax Foundation research article I showed you earlier, the fiscal cost of this USA policy will be offset by ending the tax advantages of contributions to HSAs. Future contributions to HSAs will be given normal tax treatment, which includes taxable income and subject to payroll tax. So that $110 billion in savings over the course of a 10-year budget window includes the revenue for Social Security and Medicare, which will come from us. So listen, I've been preaching about the HSA for many years now because of its quadruple tax advantages. If Congress does end up adding this to the budget bill for the next fiscal year to replace HSA with USA, I'll be straight up with you, I will be very disappointed. Do I think it's going to pass? There's always a chance it's going to pass because Congress needs to find a way to increase the Social Security and Medicare revenue. Not to mention, the tax revenue in general, right? And please keep in mind that the bill is not yet drafted. So I'll keep you guys posted if I see anything new. But in the meantime, you can go to firestatechat.com/resources to get your free retirement calculator. Now, the second proposal is to include HR 5688 to improve the HSA, or they call this the HSA Improvement Act. And it's all about making HSAs more flexible, accessible, and practical for everyday Americans like you and me. And right now, there are some frustrating restrictions that limit who can contribute to an HSA, but this bill aims to fix that. And well, sort of. And first, it allows individuals using key health services like direct primary care arrangements and worksite health clinics to contribute to their HSA funds. And that means if you have a membership-based healthcare plan or use employer-provided health services, you will not be locked out of tax advantage savings. And under this proposal, you'll be able to pay a set monthly fee capped at $150 for an individual or $300 for a family to get direct access to a primary care doctor. By the way, did you know that over 50% of Americans who make over $100,000 a year are living paycheck to paycheck? So is it always an income problem or a spending problem? If you're having trouble figuring out your budget, I encourage you to download a budgeting app called YNAB. YNAB stands for You Need a Budget. That's right. Whether you make $50,000 a year or $300,000 a year, every one of you needs to create a budget to achieve financial independence. You need to give every dollar a job so that you can be more intentional with your savings and spending. You can get a free trial without any credit card information by using the link in the description below. Second, it eliminates the outdated rule that prevents someone from opening an HSA if their spouse has a flexible spending account or FSA. And right now, if your spouse has an FSA, you're basically stuck on the sideline. So this proposal changes that because it lets you build your own tax-free medical savings. And third, this is a big one because this bill lets people roll over their unused FSA or health reimbursement arrangement or HRA funds into an HSA. So imagine not having to rush and spend all your FSA money before the deadline just to avoid losing it because the FSA has the use or lose policy every year, right? So instead, you can transfer it into an HSA and keep growing it over time. And who wouldn't want that, right? And this is a huge deal because FSAs typically come with, well, some of the most frustrating rules in healthcare savings. And because any unspent money at year's end either vanishes or in the best case scenario, you get to carry over like a small portion, that is, and if your employer allows it, right? But now these leftover dollars get a second life in your HSA where they're yours to keep, growing over time and available for qualified medical expenses whenever you need them. The bottom line, HR 5688 is a decent upgrade that gives people more control over their healthcare dollars. And here's another bill in Congress that could potentially become a reality in the future, and that's the HR 5687 or the HSA Modernization Act of 2023. And I think this is the best proposal out of all, or maybe they should just combine this one with the other one that I just mentioned. But anyway, this HR 5687 is a big one because several Republicans are pushing this bill, and it's somewhat promising because they're pushing this in the Republican majority Congress. And within this bill, they're proposing to allow individuals with Medicare Part A to contribute to the HSA. So at the moment, right now, once you're enrolled in Medicare, you cannot contribute to the HSA, but you can pay for Medicare Part B with the money from your HSA, saving you thousands of dollars in Medicare. That makes sense so far, right? And the second line item allows veterans with service-connected disability and veterans benefits to contribute to the HSA. And I work with a lot of veterans with VA disability in my private client program who are not eligible for the HSA. And I'm a veteran myself, so this is a big deal to my community. And you can check out my private client program at firestatechat.com/private clients. And the third line item is for individual eligible for Indian health service assistance and how they're not going to be disqualified from health savings accounts. So as of right now, individuals using a medical care program under the tribal organization are not allowed to have an HSA. And the next one is to include bronze and catastrophic plans to be treated as high deductible health plan, which is directly connected to the HSA. And if you don't know what those are, bronze, silver, gold, and platinum plans are the health plan categories based on how you and your healthcare plan splits the cost of your healthcare. And you can check out more information on healthcare.gov. And the next one is allowing certain medical expenses to be reimbursed by HSA if they happen 60 days prior to the medical coverage. So let's say you started your HSA on January 1st, then you could potentially reimburse your medical expenses from between November 1st and December 31st in the prior year, and even though we're not covered under the HSA. That makes sense so far, right? And the next one is huge for couples over the age of 55. At the time I'm recording this video in 2025, if you have a family plan and you and your spouse are both 55 years old, you can only make a single $1,000 in catch-up contributions, even when both of you are 55 and older. But under the HSA Modernization Act, if you and your spouse are both 55, you could each make $1,000 in catch-up contributions or $2,000 total. And right now in 2025, you can each contribute the extra $1,000, but you have to have two separate HSAs in order to make that happen. It's a pain in the butt to do it. And the next section of this bill will significantly increase our contribution limits starting in 2026. In 2025, the contribution limit for individuals is $4,300 and $8,550 for the family plan. And instead, it's going to be increased to the amount of deductible and out-of-pocket limitation. And the maximum out-of-pocket cost for individuals in 2025 is $8,300 and $16,600 for family coverage. So the new contribution limit in 2026 could be as high as $8,300 for individuals and $16,600 for the family plan. And that is going to be huge for the early retirees because that's double the current contribution limits and outpaced the Roth IRA contribution limit. And lastly, the new bill could allow us to pay for qualified long-term care services. And if it becomes a qualified expense with the HSA, you could save a lot of money on taxes using the HSA to pay for long-term care if you ever need to. So I'll be completely biased and say I like the third option better. And I want to hear your thoughts in the comments below. And no matter what happens, if you haven't been paying attention to the HSA, you need to start now. My family and I prioritize investing in our HSA because health is something we cannot predict. Medical bills will happen, and the last thing any of us need is having that large medical bill eat into our 401k or Roth IRA, right? And we deserve flexibility because those healthcare costs will only go up from now until the end of our time. So no matter what Congress decides, one thing is clear: change is coming. And if that change puts more power back into your hands, then we're heading in the right direction. Stay informed, stay involved, because the more we understand these policies, the better we can fight for a future where our money actually works for us and not against us. And this has been another beast of a video, and I hope you got a lot out of it.